Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And here we are looking on the weekly chart. I always like to start the weekends with AMC. And yeah, just to go over the weekly candles and the levels coming about from the daily chart, which we'll go over in just a minute. But here I did want to point out a few things. One being that we did close the week at $4.36, being up just under 1% on the day, but being down just about 2% over the course of the week. It doesn't look so great as far as having two red candles in a row for 2 red weeks. But I do think there are some things that are encouraging in the chart. One thing, however, that is not, is that it does look like we did put in a double top here. But I do think that we could be at or near the bottom before the next bounce. So I'll go over that in a minute based on the daily time frame. Some other things that do look encouraging here for the week closing on Friday, February 2nd. We did get a high of $4.32, and we did close this week above that closing on Friday, March 1st, up about 4 cents from that previous high. So I do think it's good that we're not closing below that level. And looking at the chart with this kind of mindset, I do think it's quite possible that we're putting in a bull flag. We do have these two green candles over these 2 weeks, and then it does look like we have some consolidation here. So that might very well be a bull flag. And also with these 2 red candles coming off of this green week, it does look like this inverted hammer could suggest a reversal is on the table as we have come down a good amount. An inverted hammer like this is a reversal indicator, so I do think it's quite likely that over the next week or two, we do see a bounce. But in order to go over that, I'm just going to take us to the daily candles so we can look at the chart, and I'm also going to throw up some drawings. A lot of these I've gone over in previous videos, but I did adjust a few levels. So I do want to go over those. And so one of the things that I did adjust is this purple uptrend. I previously had the pivot point based on the high that was hit on February 15th, which was at a price of $5.05. I adjusted that pivot point to be the day after on February 16th when we hit a high of $4.95. And so the reason why I adjusted it to that pivot point is because if it was up here at the high at $5.05, the recent high that we saw hitting on February 28th at a price of $5.10, that would not intersect with this purple uptrend. So I adjusted it to the high over here so we get another test of that level. Unfortunately, we got a rejection there. And also that brings this other wick high that was on January 23rd to nearly that level. So basically getting 2 touches over here, that does make me think that this uptrend is more significant than the one I had drawn before. I do think that will be a significant one to be paying attention to. And so that is based on, like I said, the high on February 16th at $4.95, and the originating pivot point is based on the open price that was on January 12th, and that is at $4.67. So if you want to draw that on your own charts, you can look at that to see where price goes to. Maybe it gets rejected there again, but it will be getting rejected at a higher level, like at $5.17. And at that point, I do think we might find support up there. So I do think it is good that we are dealing with an uptrending level of resistance rather than a downtrending one. But then also with that uptrending level, I did mention in last week's video that this could be the start of an inverse head and shoulders pattern, but unfortunately it does look like we got rejected from that. And so with that being said, I do want to point out that maybe a month ago, maybe a little bit more than that, I did put out a video on Aquestive Therapeutics pointing out an inverse head and shoulders pattern that I viewed as beautiful. But what happened following the test over here was a breakdown and a consolidation. And so I had lost conviction in that play with this neckline being right around a price of $3, expecting dip buying opportunities around 250. And what happened is, I eventually lost conviction in it, taking profit, so I didn't lose money on it. But you can look at Aquestive right now, and it's above $4 a share. And so while we might have seen this pullback, this could be a really good time to be accumulating. It's quite possible this inverse head and shoulders pattern does still play out. It is also possible it doesn't. But I do think that we could see a lot of upside, potentially to $7, $8 in the next couple weeks, maybe the next month. But I do think that we need to be patient, and I do think that we should be taking advantage of dip buying opportunities as they present themselves. And I do think that we are experiencing that right now. And before I throw up the Fibonacci retracement, I do also want to point out a couple key levels, or really just this one here, that's at $4.26.5. That is based on the low of February 13th. And that also coincides with here, the low February 23rd, hitting a low of $4.28. So just above that level when this white downtrend, the bottom of this parallel channel, was tested. I do think that yellow dash line is significant, and we did get two tests of it over the past couple days. With the low on Thursday, February 29th, being $4.22, and the low on March 1st, Friday, being $4.23. So I do think ultimately, we don't want to be seeing closes lower than $4.22. That would be closing at a new low in this cycle. So that would be bad. But really, I think it would be ideal to be paying attention to $4.26.5, this prior low, because if we are not getting closes below that, I do think that suggests a lot of strength, a lot more than if we're just getting closes above 422. I do think this suggests that, we are holding this level, respecting it, and that further upside is on the table. And then also, I had mentioned the double top before. You can clearly see that. We did put in a higher high here, which might have seemed bullish, but we saw these like spinning tops. Here, I'm just going to remove the drawings there. Not so much here, more of a wick high that suggested there could be a reversal, but on the 28th, so on earnings day, we did see what looks like this kind of spinning top, and that did suggest there could be a reversal, especially coinciding with this other high here at $5.05. So putting in the high on the 28th of $5.10, we did see a pullback following earnings, which is unfortunately, fairly discouraging. But as I had mentioned in last week's video, just like we saw spinning tops up here, we saw a spinning top on here Friday, February 23rd, and I suggested we'd see some up moves, and we got them before this pullback. And just like Friday, February 23rd, we are seeing another spinning top. And so one thing that I view as potentially more bullish for this spinning top rather than this one is that our opening price was higher than Thursday's close. So potentially that could mean there is more strength behind it. Also, we do see more volume at the bottom here. So I do think that we could be seeing some upside next week. But on the note of upside and finding levels as support, I'm just going to go over some drawings here, really focusing on this Fibonacci retracement that I have here, just bringing it back into picture. And this is basically the same Fibonacci that I went over last week. However, I did adjust the high to $5.10, corresponding with the high that we hit on February 28th. And so that does push the levels up a little bit higher. And so with that being said, the 50% retracement here is at $4.34.2. And so during this dip from last week, we did get a wick below that on Friday, February 23rd, and that was respected. And so now we are back at that level. However, we did not only see wicks below that level, we saw both of these candles kind of straddling that level, with Thursday closing below that level. However, on Friday, we opened below it and closed above it. So I do think that is good that we closed the week above this level. Also, we did get wicks down to test $4.26.5. That does seem like it's acting as support. But if it does not hold, The next level down is the 618, and that would coincide with a price of $4.16.4. But then below that, and I actually find this to be the more compelling level that we will return to, $4.07 marked by this yellow solid line. That could also coincide with testing the bottom of the downtrending channel that we've been in for some time. And so testing the bottom of that channel as support, I think could be really good, because while we did break into it, we did test it one day. If we get another test of it, I think that could really mark the bottom before moving higher, before breaking into and holding in the fives. And so getting down to $4.07, I think could be a great buying opportunity if we can even get there, because I'm thinking that 426.5 does look like it's acting as support currently. But then again, further downside, just in case to prepare us, we do have the 786 here, and that is at a price of, let's see, $3.90.9, so right around $3.91. Coming back to that would be just above this white dashed trend line. I'm hoping we don't go to that level. I do think that $4.07 will be the low, especially because I do see this spinning top signal that does suggest that we will see momentum into the next week, bringing us higher, potentially getting back to $4.81, ideally putting two closes in above that level. We did do that for this previous high, but the second close above it on February 16th was only a few cents above it, being just 2 cents above 481, so not really being a clear indication of holding that level. And then we did break below and tested it multiple times as resistance. And so I think that if we can get not a blow off top close above it, but if we can get two candles going above that level, one going from below it to above it, and then another one continuing that pattern, ideally getting to $5.17, that would be great. And if we can get two consecutive closes above the current high for this cycle of $5.10, that would suggest that we are in a good position to be testing the top of the channel here. And so, that's what I'm hoping for. That would bring price to right around $6 a share. And if we can break through that, that could potentially be bringing us to $7, if not $8, which I do have marked here in red. So that's what I'm hoping for long term. And, really just some thoughts on the earnings call before I do close this. Adam Aron mentioned this 2 times during the call. He said, do the math. And that when we raised capital, when we diluted the stock further, that needed to be done because the company needed the money, didn't have the funds to pursue things like AMC distribution, or, perhaps the chocolate line or the beverages that we might be bringing out, like wine and beer, and, the Eras Tour and Renaissance, I think are things that are game changers for not only AMC, but the movie theater business and industry and Hollywood at large. I think we're coming back, and I think that we're going to be coming back with a fierce fire, and I think that we're going to be seeing some levels that we haven't seen in quite some time, getting back to $10 a share to fill this gap, to reclaim this double top that was right around $11. And, as I kind of alluded, zooming out here, I do think that we will be seeing much higher prices later this year, or at least that's what I'm hoping. I have conviction in not only the stock, but also the company. And, I'm excited to be here, and I hope you guys are too. And I hope that you're able to take advantage of the discounted prices that we're seeing now. Hopefully we don't get back to $3 a share in that range. Hopefully $4.07 is the low. And if it is over the course of the next week, I do think that will be a great dip buying opportunity with lots of potential, but also, there is always potential for further downside, so good to be careful about that. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.